Hi everybody, this is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol XLY. This is the consumer discretionary select sector spider, and as you can see, it was the really hot spider to be in during the month of October. This was a really nice run. The entire month of October into November, and then there was a red flag was first this doji that formed over here in the last week of October. That was a warning flag in my opinion, and then you had this red candle that formed on Wednesday of last week, and that created a bearish engulfing reversal pattern, and then now that pattern has been confirmed today by this red candle. There was a break below EMA's 4 and 8. Those are the pink and green lines. Those were the key levels to hold, and that put this middle Bollinger Band on deck. And now the middle Bollinger Band is the key support level to hold. As long as the middle Bollinger Band holds, the uptrend should continue. If the middle Bollinger Band turns into resistance, it will equal downside risk. So it's very important that, there's a bounce off of this middle Bollinger Band support level. If not, you're going to see a pullback. Recent pullbacks, here's one down here to the lower Bollinger Band. Here the middle Bollinger Band broke, and then there was this big drop after the lower Bollinger Band support level broke. So over here, what you'd be looking at is if the middle Bollinger Band at 79, 73 breaks, there's a potential drop down to the lower Bollinger Band at 76.87, because XLY has a recent history of dropping to the lower Bollinger Band once middle Bollinger Band support breaks. So there could be, substantial downside risk if there's not a bounce off of the middle Bollinger Band. You have RSI is still in the bull zone at 57.70, still between 50 and 70. You have Fasto between 50 and 80, so that is in the bull zone as well. Okay, bulls want to see both indicators stay above 50. Volume is just average. What you have over here is so you have this pullback, but it wasn't on heavy volume. So that's, I guess that could be looked at as one positive. At least there wasn't a giant volume spike. But as you can see here, there was a bearish crossover. The MACD line crossed the signal line to the downside. So you have this red histogram bar. So this could signal the start of a downtrend. But bulls want to see the MACD line stay. They want to see that green line stay above the red line, and so it'll, if there's a crossover, you might get this type of action. Or if there's a big pullback, this could be signaling a bigger move to the downside. So look up here at the next chart. This is another daily chart that shows the 50, the 100, and 200-day moving averages. As you can see, the candles broke above all those levels the first week of October, here on October 5th. And then turn them into support, and now that they've been riding above all three of those key support resistance levels. So now what's on deck is the 100-day moving average at 77.27. If there is a pullback, that would be the key level to hold. So you'd want to see, you definitely want candles to stay above these three of the big moving averages here, in order for this chart to remain bullish. Let's look at the next chart. The next chart is a 5-minute chart, and then this is showing today's action. As you can see, there was this big drop, big pullback, and then at 12:30, the candles broke above the middle Bollinger Band, and a new uptrend started. And so as you can see, as the share price was heading higher here, the candles remained above the middle Bollinger Band, and they were riding the EMA's 4 and 8 support higher. So that's going to be important for tomorrow. Bulls, you want to see candles staying above this middle Bollinger Band. If this support level breaks, it's currently at 80.23. That's going to signal downside risk and put this lower Bollinger Band on deck. There was this big volume spike into the close and a pullback. So, we'll have to see what that's all about tomorrow. It could be profit takers, could be people loading for the bounce tomorrow. We will see. As you can see, RSI and Fasto up here are both in the bull zone. They're both in their bull zones. And then down here, you've got the MACD line is starting to hook down. It's starting to pinch. Bulls, you don't want to see a bearish crossover. There wasn't a bearish there was this bullish crossover down here at 12 when this when the new uptrend, right before the new uptrend started, and there hasn't been a bearish crossover since then. So keep an eye on MACD on the 5-minute chart. When the green line crosses the red line to the downside, it's going to signal downside risk. And then let's look at the last chart. This is the 15-minute chart. This is a 2-day chart, so it's showing Friday's action here. There was it's kind of a consolidation day. Today there was a big drop at the open, and then there was a bounce down here at this 79 level, and then there's been a uptrend that started at 2 o'clock when candles were forming above. So this is set up for for more upside tomorrow at the open if this middle Bollinger Band support level holds. If you see a break below that, that's going to signal this lower Bollinger Band being tested. So what we're looking for here is the possibility of a new uptrend starting. Okay, now look down here at MACD, and you'll see there was this bullish crossover on MACD at 115. So that was signaling this move here. So you want to just make sure that the signal line is staying above the MACD line is above the signal line, the green line above the red line, and that will be signaling more upside. So this is XLY. Thank you for viewing this chart. There was a pullback today. This has been a high flyer, high flying place to be. The consumer has been where the money's been at. So this pullback could be, if there's going to be a bounce, this is going to be the level to bounce from. If you see a close tomorrow below this middle Bollinger Band, that could signal more downside risk. So and possible start of a new downtrend. So for heading into November here and the shopping season, we'll see what's going on with the consumer on Tuesday. All right, thank you so much for viewing this chart. I hope you're having a wonderful day.